In the early 1930s, millions of people across Europe woke up every morning with the same silent fear. Factories were quiet, banks were locked, savings disappeared overnight. Fathers stood in unemployment lines wondering how they would feed their families. Mothers stretched meals thinner each day. Dreams that once felt stable suddenly felt fragile. And all of it began with a shock that traveled across the ocean, from Wall Street to the streets of Berlin, London, Paris, and beyond. If you've ever felt confused by the economy, worried about your future, or afraid that the system isn't built for people like you, this story matters to you. Because the Great Depression didn't just crash markets, it broke lives. And it reshaped Europe forever. Welcome to Crypto Brainpower. This channel exists to help beginners understand the US stock market, learn from history, see how markets evolve, and build wealth with a long-term mindset. We focus on lessons, not hype, and clarity, not confusion, so you can grow smarter and calmer in a world that often feels uncertain. If you want future videos covering another stock market or economic topic, comment your topic below. Subscribe to support the channel and continue learning with us. To understand how the Great Depression broke Europe, we have to start in the United States. In the 1920s, America was booming. Stocks were rising fast. People believed markets only went up. Ordinary families bought shares using borrowed money. Banks lent freely. Confidence felt endless. Then in 1929, the US stock market collapsed. Prices fell hard. Panic spread. Banks failed. Businesses shut down. Unemployment exploded. And the shock didn't stop at America's borders. At that time, Europe was deeply tied to the US economy. After World War I, many European countries were already fragile. Germany was paying massive war reparations. Britain and France were rebuilding. Much of Europe depended on American loans to survive. When the US market collapsed, American banks pulled money back home. Suddenly, Europe's financial lifeline was cut. In Germany, the impact was devastating. Banks collapsed one after another. Businesses failed. Unemployment soared to nearly 1/3 of the population. Imagine an entire generation of skilled workers with no jobs, no savings, and no hope. People lost faith in democracy because it failed to protect them. Extreme political movements filled that vacuum. Economic pain turned into social anger. And history shows us where that path led. In Britain, factories slowed and exports collapsed. Coal miners, shipbuilders, and steel workers lost their livelihoods. Entire towns depended on one industry, and when that industry died, so did local economies. The government struggled to respond. Spending cuts made life harder for the poor. Confidence in leadership weakened. France felt the pain more slowly, but it still came. Trade fell, investment dried up, political instability increased. Across Europe, fear replaced optimism. People stopped spending. Businesses stopped hiring, banks stopped lending, the system froze. This is one of the most important lessons in market history. When confidence disappears, economies don't just slow down, they fracture. We see echoes of this even today. When investors panic after bad CPI inflation data, or when markets wait nervously for Federal Reserve meetings, it's not just numbers moving on a screen, it's confidence shifting. In modern times, we watch companies like Apple, Tesla, and Amazon move entire markets. When the S&P 500 drops sharply, millions of retirement accounts feel it. Platforms like Robinhood, Fidelity, and Charles Schwab make investing easier than ever, but they don't remove risk. The Great Depression reminds us that markets are deeply emotional systems, driven by fear and trust as much as logic. One critical mistake during the Great Depression was policy failure. Governments didn't understand how to respond. Central banks raised interest rates instead of lowering them. They tried to protect gold reserves instead of people. Trade wars made things worse. Countries raised tariffs, shrinking global trade even further. Instead of cooperation, nations turned inward. Today, when we hear about Federal Reserve decisions, jobs reports, and inflation data, these lessons matter. Modern policymakers study the Great Depression carefully to avoid repeating it. That's why the Fed steps in during crises. That's why stimulus exists. Not to guarantee success, but to prevent total collapse. For investors, the emotional lesson is just as important. During the Great Depression, those who panic sold at the bottom locked in losses forever. Those who survived and stayed invested over the long term eventually saw recovery. Though it took time and patience, markets did recover. Economies did rebuild. But the cost of fear was enormous. Europe didn't just suffer economically, the social damage lasted decades. Trust in institutions vanished, extremism rose. War followed. All because financial systems collapsed faster than governments could respond. When you invest today, whether in stocks, ETFs, or long-term portfolios tracking the S&P 500, you are participating in a system shaped by those painful lessons. Diversification exists because of that era. Regulation exists because of that era. Long-term thinking exists because short-term speculation once destroyed entire nations. This doesn't mean markets are safe or predictable. There are no guarantees. Apple can fall, Tesla can crash, Amazon can disappoint, economic reports can shock markets overnight. But history teaches us that patience, discipline, and understanding matter more than emotion. The Great Depression teaches us that wealth isn't built by chasing fast gains. It's built by surviving downturns, by respecting risk, by understanding cycles, by knowing that fear feels permanent when you're inside it, but history shows it never is. Europe paid an unimaginable price for financial collapse. The United States learned hard lessons from it. And modern investors inherit both the warnings and the protections that came from that suffering. If you ever feel lost in the market, overwhelmed by headlines, or worried about your future, remember this. The goal isn't to predict every crash. It's to build knowledge strong enough to endure them. That's how real wealth is built. Slowly, calmly, over time.